You're welcome to another impactful session at the Binary Options University, and I'm so excited to be here once again to teach you guys how to excel and succeed in this industry. Okay, today we're going to continue from where we stopped the last time, and I hope you guys are going through the charts and you guys have been practicing all what you've learned so far. Okay, so today is going to be very impactful, like any other day, And today we're going to continue from where we stopped. Okay, so we're going to be taking a look at the 15 minutes chart. Okay, so we started with the 5 minutes chart, but today we're going to continue with the 15 minutes chart, the hamster pattern strategy. It's really amazing. It's working. 90% win accuracy. Okay, so if you apply it well, the way you are taught, you are being taught today, or the way you are being taught at the university, you'll be rest assured that you produce 90% wins most of the time. Okay, so this system has to be harnessed. You have to understand it, you have to master it to trade accurately. Okay, so what you need to do is to identify, you look for a chart that is showing, that is agreeing with the criteria, set of criteria. Okay, so like we discussed the other time, you're looking for a time when the asset is so strong, is either selling strongly or buying strongly. Okay, so you are looking for a buying pressure or a selling pressure. Okay, and you are looking for times when the market is showing great momentum. Okay, so today we're going to be taking a look at the 15 minutes chart. Okay, so we started with the 5 minutes. Okay, so but I want to show you guys how to trade 15 minutes. Okay, so it's the system works across all time frames. Okay, so it works perfectly well for 5 minutes, 15 minutes expiry. It works excellently for the 1 hour, the 30 minutes. Okay, so it works very well for all time frames. Okay, so it works for short term and long term. So if you master the basic principles of the system, if you master the basic principles of the pattern, you'll be rest assured that you have 90% a win accuracy in all your trades. Okay, so let's get down to business today. So I'm going to be showing you guys how to trade the 15 minutes. Okay, so we did a 5 minutes the other day, and so but today we're going to taking a closer look at the 15 minutes. Okay, so basically the same principles, they obey the same principles, but the only difference is the expiry. Okay, so let's take a look at this USD card chart, and before we go ahead, I want to reiterate something. If you are new to trading, you're a newbie, we recommend that you start trading with an amount of $500 or less. Don't trade more than $500 if you are a newbie, you've never traded the market before. Okay, so you have to start with an amount that is riskable. Don't start with an amount that you can afford to lose. Okay, so you start with an amount that is reasonably low. Okay, so we recommend that newbies, novice traders, new traders start with $500 down. Don't exceed $500. Okay, so but the more experienced you become, the better you are to handle the rigors and the diversities of the market. Okay, so the market has its own complexities. So you learn it with time as you grow, in the market, and as you master the fundamentals of the market. Okay, the market as a language, and the language will become clearer and more interesting as you grow and practice the market. Okay, so for now, we recommend that you start with an amount of $500 less or less. Okay, don't exceed that. As you become more experienced, you can trade with $5,000. You can trade with $10,000. Okay, but you don't start with something above $500 as a newbie. You've never traded the market before. Okay, so you have to start small. You have to start small and build the small into a large amount. Okay, so you don't start big, because when you start big, you're going to crash. Okay, so you want to start small and learn the principles while you multiply the little you have. Okay, so it's in the little that you multiply your finances. Is in the little that you learn the principles of wealth creation and multiplication. Okay, so you don't start big in life. You start small. You start small and gradually improve. Okay, you go gradually, then gradually until you become the better and the best you. Okay, so it's a gradual work in progress, and there will never be a time when you will be self-sufficient and you won't need education. Okay, so it's an ongoing process of learning and relearning and unlearning. Okay, so you're going to continue learning and learning, because life is a continuous process of learning, reconditioning, conditioning, reprogramming, and relearning. Okay, so you can always become a better you as you progress. Okay, where you are today is not the best you. There's a better you ahead of you. So every level you find yourself, is an opportunity to aim higher. Okay, so you can expand your capacity from where you are. Okay, so let's delve straight into the business of today. The first thing we discussed the other day, the first thing you're looking for, this is the US dollar card. That's the US dollar and Canadian dollar. Okay, so you are looking for a time when the market is very strong. Okay, are you looking for a bullish momentum or a bearish momentum? Okay, so the first signal we are looking for is a bearish or a bullish momentum. Those are times when the market is trending strongly. The market is trending upward or trending downwards. Okay, so those are times when the market is at its greatest momentum. Okay, so either the bears are in control or the bulls are in control. Okay, so you're looking for a time when the market is trending strongly with a very strong momentum. Okay, so on this chart you can see that the price is trending. The price is trending. You can see it's an upward trend. It's an upward trend. Okay, so you are looking for this upward trend. This is 50. By the way, this is 15 minutes time frame. Every candle indicates 15 minutes. What has happened within 15 minutes? Okay, so every candle indicates what has happened within 15 minutes. Okay, so within 15 minutes you can see this bullish marubozu formed here. Okay, so this marubozu indicates that the bulls are in control. Okay, so you are looking for a strong momentum in the market, and this is indicated by a close outside the Bollinger Band. Okay, so whenever you see a close outside the Bollinger Band, you know that there is a strong bullish or bearish momentum, and the market is moving up or moving down with a very strong momentum. Okay, so that is the first signal you're looking for the price to close out of the Bollinger Band. Okay, so that's the first signal. You can see that the price closed outside the Bollinger Band in a very strong way, in a bullish way, indicating that the bulls are in charge. Okay, so you want the price to close out of the Bollinger Band first, then you're waiting for a retracement. And you can see, if you can remember the concept that you learned at the university, the pair of genes concept. You can remember what we learned the other day, that there is always a level where the buyers resist buying, okay? And when you get to that level, the buyers will resist buying, and then they will resist, and then the price will drop, because the vendors will ultimately reduce the prices of their items, okay? So the price of the pair of jeans will be reduced by the vendors, just to make it more attractive for the buyers to pick up momentum and begin buying again, okay? So the vendors will reduce the price at the resistance level, and when they reduce the price will drop down to become more attractive for prospective buyers, okay? So at this level, you can see that the price was not attractive, and so the sales dropped. And as a result of the low demand, the vendors had to reduce the price of the pair of jeans. And so because they reduced the price of the pair of jeans, you can see what happened. The price moved from this resistance level down to this level. Okay, so what we are looking for with the hamster pattern strategy is for the price to retrace, to cut back from the resistance level over here. So you are waiting for a cutback after a strong bullish move outside the Bollinger Band. You are waiting for price to cut back inside, back into the Bollinger Band. Okay, so the price is cutting back from this resistance level, and so it will cut back into the Bollinger Band. Okay, so that is the second criteria. Okay, that is second signal. Okay, so the price will cut back into the Bollinger Band, and after a cutback, you're expecting price to move back up to test that resistance level again. And so you want the price to cross this resistance level over here, and as soon as price crosses this resistance level, and you can see it clearly on the USD card that the price crossed the resistance level over here, and then you form the higher high. Look at this long Marubozu. The Marubozu went up, and there was a clear higher high formed. At this level, the market went higher than the previous high, so we call that level the higher high. Okay, so what you are now waiting for, and by the way, you must confirm that the divergence is obeyed also. There must be a corresponding divergence on the RSI chart. Okay, so when the divergence is confirmed, then you know that is a perfect setup. Okay, so the next thing you have to wait for is a confirmation candle, either a Marubozu or a star, a shooting star, or you can wait for a Marubozu, a star. You can wait for there's one more pattern that we discussed the other day, the Marubozu, the star. Basically, those are the two patterns that you wait for: the shooting star, the Marubozu, and the star. Okay, so those are the three confirmation candles that you wait for. Okay, so as soon as you see the confirmation candle, after the candle that crossed the resistance level, you place a sell option, you place a put option, and then you set your expiration time to 15 minutes, and it must be exactly 15 minutes, not 14 minutes 56 seconds. Do not set your expiration at 14 minutes 56 seconds. Ensure that the expiration is exactly 15 minutes or more. Okay, so what you do is to look for the next 15 minutes expiry, and then you select the next 15 minutes expiration time. Okay, so and that will be your expiration time, 15 minutes, nothing less than 15 minutes. Okay, so when you're using a 15 minutes candlestick, you must set your expiration at 15 minutes or more. Okay, so you never set your expiration at 15 minutes, less than 15 minutes. Never do that. Okay, so the 15 minutes candle must be used to set a 15 minutes expiration time. Okay, so when you are using a 15 minutes candlestick chart, you must set your expiration at 15 minutes or more, not less than 15 minutes. I repeat, when you are using a 15 minutes candlestick, the other one we talked about the other day was 5 minutes, but this is 15 minutes candlestick chart. So when you are using a 15 minutes candlestick chart, your expiration must be 15 minutes, not less than 15 minutes. Okay, so you can see after the confirmation candle over here, you can see what happened. There was a retracement, like we discussed. You should never trade at the confirmation candle. Always wait. Okay, always wait for a retracement back to the highest level of the confirmation candle, meaning always wait for a retracement back to the upper body of the confirmation candle. Okay, so as soon as price retraces to the upper body of the confirmation candle, you place your 15 minutes trade. It must be a fresh 15 minutes, not 14.55, not 14.32. Make sure your expiration is exactly 15 minutes or more. Okay, so you have to wait. Never trade at the end of your confirmation candle. Always wait for a retracement back to the upper body of your confirmation candle. And you can see, as soon as that happened, you can see what happened next. It's a clear in the morning, it's a clear win. Okay, so let's move on to the next chart. The next one is USD card. Okay, so this is also USD card, and you can see clearly that this also formed the hamster pattern also formed here. You can see it clearly. It also formed here. Okay, so you can see what happened. So from our set of rules, we are waiting for a strong momentum, either up or down. Okay, so according to what is being shown on the chart now, you can see that there is a strong bullish momentum, and price is tagging along the upper band of the Bollinger Band or crossing the upper Bollinger Band. So you see that price is tagging the upper Bollinger Band, and then you must make sure that at least one candle closes out of the Bollinger Band. That's the confirmation that there is a strong bullish momentum occurring. Okay, so now you can see, you wait for price to close out of the band. This is the first one, and then you want to wait for a retracement back into the band. Okay, so when you wait for the retracement back into the band, you can see what happened. This is a retracement. It's more like a ranging retracement. Okay, so but it's a retracement. Anything that cuts back into the Bollinger Band is a retracement. Okay, so the next thing you're waiting for is for price to close above the previous resistance level, which is over here. Okay, so as soon as price closes above this resistance level, then you can see what happened next. There is a confirmation candle. It's like a smallish Marubozu candle. You can see it. This red candle over here is a smallish Marubozu candle. Okay, so the Marubozu candle confirmed this trade. Okay, so the next thing you have to do is to ensure that the divergence also is obeyed. Okay, the divergence must be obeyed. You can see the higher high on the candlestick chart is not producing a higher high on the You can see it's not producing a higher high on the resistance chart. You can see over here and over here. You can see the chart is clearly indicating a higher high, but the RSI candle, the RSI chart is indicating that the momentum is not going higher. So you can see it's clearly on the same level, or you can see it's this level is not higher than this level. Okay, so the higher high on the candlestick chart is not producing a higher high on the RSI chart, so the divergence is confirmed. So the next thing you have to do, you don't trade at the end, at the close of the confirmation candle. You have to wait for a retracement back. You have to wait for a retracement back to the upper body of the confirmation candle. As soon as price retraces back to the upper body of the confirmation candle, you place a trade, a 15-minute trade, a fresh 15-minute trade. Make sure it's 15 minutes or more. Never trade less than 15 minutes. Okay, so you can see price touch here, retrace back to the upper body, and look at what formed. The next thing is a clear in the money. Okay, so this is a clear win. Okay, so the next one, let's go on to the next chart. The next one also is a US dollar card, the US dollar Canadian dollar. Okay, you can see clearly what happened. There is a strong bullish momentum. After the strong bullish momentum, you can see the strong bullish momentum. This is the strong bullish momentum. This strong bullish momentum clearly crossed the upper Bollinger Band, and it crossed out of the band. So you can see the bullish momentum. This is a very strong Marubozu candle, close outside the Bollinger Band, the upper Bollinger Band. You can see it is clearly out of the band, and so you have to wait for a retracement back into the band. And you can see, according to the pair of jeans concept, you can see that the clear resistance is formed here. So you wait for a cut back into the Bollinger Band, and as soon as price cuts back into the Bollinger Band, you can see you have to wait for price to rise again and continue the trend, and ensure that price crosses this previous resistance level. According to the pair of jeans concept, ensure that price crosses this resistance level. Okay, so as soon as price crossed it, you can see what happened. Price crossed it slightly, but it still crossed it. Okay, so you can see what happened. The next thing that formed was the confirmation candle. This is a smallish Marubozu candle also. Okay, so it's a smallish Marubozu candle, very small. Okay, so you can classify this as a star, because this is bigger than a star. You can also classify this as a shooting star because there's no wick on top. Okay, but the closest to this is a Marubozu candle. So you have to ensure that there is a confirmation, there is a divergence confirmation on the RSI chart also. Okay, as soon as you confirm a divergence on the RSI chart, you will now wait for a retracement back to the upper body of the previous of the confirmation candle. Okay, so you can see the price retrace back to the upper body of the confirmation candle, and so this is a sell signal. Okay, you can see, and so a sell signal was generated when price touched the upper body of this confirmation candle. And so the next thing you have to set the expiration to at 15 minutes. Okay, set the expiration at 15 minutes. Set it at 15 minutes, the fresh 15 minutes, not less than 15 minutes. Okay, you can see it's a clear in the money also, a clear win. Okay, so let's go on to the next one. This is also a USD card. By the way, USD card is a very lovely pair. It's a very good pair for binary options. It's a very, very good pair. AUD USD is also a good one. AUD JPY is a good one. Great British Pound USD is a good one. Euro USD is a good one. Basically, these are the strong pairs for trading. They produce very wonderful setups. Okay, so we just recommend these pairs: the Euro USD, the USD card, card JPY, AUD USD, AUD JPY. Okay, USD card, Great British Pound USD. These are pairs that have been validated and tested to produce the pattern over and over and over again. Okay, so this is as a result of 6 to 8 years of our studying the charts. Okay, so we've actually validated this system after 6 years of trying and testing different things that work and things that don't. Okay, so this is actually, we can say with full confidence that this is like the best way to trade the market. Okay, from our experience and from what we've tested in the past, we can say with full confidence that this is the best way to trade the market. Okay, we've tested what works and we've tested what does not work. So in 6 years, and you can see a child that is 6 years old is big enough to know what he wants. Okay, so 6 years is not a joke. So after testing a strategy for 6 years, you can know that that strategy has gone through a rigorous process of quality assurance. Okay, so this strategy is 90% accurate. Okay, so we have tested and validated this system. We've tested and validated this strategy for 6 years. Okay, so we started 6 years, about 6 years. Okay, so this strategy is 6 years old. Okay, in fact, more than 6 years old. It was validated, and it became a strategy in 2018. Okay, so that is from 2012. That is 6 years of testing and validating. Okay, so 2018 to now, that is an extra 2 years. Okay, so it's amazing. Okay, so let's go on with and I want to tell you something. Patterns do not change. Behavioral patterns do not change. They might tweak themselves to adjust to the psychology of the market. Behavioral patterns do not change. Okay, so what happens is this: economies change, and so the patterns tweak themselves to fit into that particular season, but they do not change their DNA. Okay, so what we're trying to tell you is this: these patterns will keep working as long as people buy and sell. Okay, so buying and selling can never fail, and as long as buying and selling can never fail, the hamster pattern can never fail, because the hamster pattern is built on the premise of buying and selling. Okay, so it's built on the principles of buying, selling, and overbought and oversold levels. Okay, so we build a strategy on the principles of buying and selling. Okay, so this strategy is going to work for 20 years, 40 years, 50 years. Okay, if God tarries. Okay, so let's move on. You can see you're waiting for price to cut out of the Bollinger Band. Okay, so you wait for price to cut out of the Bollinger Band, and then you're waiting for a cut back into the Bollinger Band, and then you're waiting for a continuation and a break of this resistance level according to the pair of jeans concept. I'd encourage you guys to practice this a lot. Okay, so according to the pair of jeans concept, this is a resistance level, is a strong resistance level, a level where buyers stop buying. Okay, and a level where vendors had to reduce their price. Okay, so and then after reducing the price, you can see this stimulated a series of buying. You can see this series of buying is clearly shown by the Marubozus that are forming over here. Okay, so you can see. So what you want to wait for is a cross. You want the price to cross the resistance level. Okay, so you're waiting for price to cross this resistance level, and this happened here. So there was a clear cross of this resistance level. As soon as price crossed the resistance level, you have to wait for a confirmation candle. There is a confirmation candle. Okay, so you can see this is a confirmation candle. As soon as the confirmation candle is formed, you have to confirm that the divergence is obeyed. So divergence is obeyed here because you can see that the higher high on the chart is producing a lower high on the RSI. Okay, so but this is a false trade, and I tell you this trade is not a good trade. Although it won, I don't advise you to trade immediately after the confirmation candle. You must wait for a retracement back to the upper body of the confirmation candle. Okay, so always wait for a cutback. Always wait for a cutback. Always wait for a cutback. I reiterate. Always wait for a cutback to the upper body of the confirmation candle. Okay, so this is not a good setup. Although it's won, this is not a good setup. You are going to lose. You are going to lose with this setup. If you do not wait for a confirmation, if you don't wait for a retracement back to the upper body of the confirmation candle, you will lose more than you win. Okay, so ensure, and trust me, we have tested this strategy for over 6 years, more than 6 years. You know, so we have tested, we know what works and we know what does not work. Okay, so if you do not wait for the confirmation, if you do not wait for a retracement back to the upper body of the confirmation candle, you're going to lose more than you win. Okay, so this is not a good setup. Let's move on. The next one is also USD CAD, and this is a very, very good setup. And you can see that the price, there's a strong bearish momentum, and the price moved down, close out of the Bollinger Band, close outside the Bollinger Band. You can see the cuts, it cuts through the lower Bollinger Band and close outside the Bollinger Band. So the next thing you're waiting for price to retrace back into the Bollinger Band. You're waiting for price to cut back into the Bollinger Band, and then you're waiting for a continuation, a trend continuation. Okay, so as soon as price continues and then crosses this, you can see this is now a support level. You can see this is now a support level. Okay, so according to the pair of jeans concept also, this is a level where the buyers have picked interest in a particular jeans or in the particular commodity. Okay, so this is a level where buyers are buying because they find the price attractive. Okay, so at this support level, you can see what happened. The price went up because there was a demand, there was an increase in demand, which led to the increase in the price of the commodity, which is USD CAD in this case. Okay, so you're waiting for a cutback into the Bollinger Band, and so you're waiting for price to continue within the band, inside the band, and then you're waiting for price to cut to cross the support level. You can see the price cross the support level clearly. Okay, you can see the price came down and caught this support level over here. Okay, so as soon as price cuts the support level over here, you can see you want to wait for a confirmation, and then you can see the confirmation candle. The confirmation candle is a lovely hammer. Look at this green hammer. And I've told you before that when you are on a downtrend, ensure that your candlestick, your confirmation candle, is green. When you are in an uptrend, ensure that your confirmation candle is red. Okay, so the confirmation candle here, you can see the very nice hammer that was formed over here. So the next thing you want to do is to confirm that the divergence really formed. And so you see the divergence formed well because the lower low, you can see the lower low is producing a higher low on the RSI. Okay, so you can see the higher low on the RSI. So, and the next thing you want to do is to wait for a retracement back, to the lower body of the hammer. Okay, so as soon as price retraces back to the lower body of the hammer, you're going to trade. You trade in next. You trade in next 15 minutes. Okay, so make sure you trade in next 15 minutes. Do not trade 14.2 or 14.55. Trade the next a full 15 minutes. Okay, so let's move on. The next one we want to talk about is the Euro USD. The Euro USD, you can see a clear formation of the hamster pattern. Okay, so you can see the hamster pattern in action here, and I know you guys can clearly identify the hamster pattern by now. You can know the confirmation candle. So look at it, a clear cut out of the Bollinger Band, and so you want a retracement back into the Bollinger Band, and then you want price to continue, although it didn't continue inside the Bollinger Band, but you can see the next green candle continued inside the Bollinger Band, which is a confirmation. Okay, it's a confirmation of weakness. There is a kind of weakness going on in the trend, because when you see something trending very strong by closing out of the Bollinger Band, then you suddenly see that particular asset or commodity moving within the Bollinger Band, it indicates that there will soon be a shift in momentum. Okay, it indicates that there will soon be a shift in the sentiment, in the momentum. Okay, and it indicates that the trend is weakening gradually. Okay, so when you see price cross out of the Bollinger Band, then suddenly see price, that same asset, from crossing out of the Bollinger Band, suddenly transits into moving and tagging along the band. You can sense that there is a reversal coming. Okay, so you want price to close out of the Bollinger Band, outside the Bollinger Band, and then retrace back into the band, and then continue tagging along the band without crossing the band. Then that is a confirmation as to the weakness in the market. Okay, so the next thing you want to wait for the confirmation candle, and you can see the confirmation candle is like a small Marubozu. Okay, so a small Marubozu with a nice little wick up there, indicating resistance, indicating that level is rejected. It indicates that there is a great rejection of an upward movement, so indicates that price will not move upward again. When you see a wick in the direction of the trend, you just know that the trend is over. Okay, so when you see a wick in the direction of a trend, just know the trend is over. Okay, so now the confirmation candle is formed here, and so the next thing you want to do is you want to confirm that there is a divergence on the RSI. Okay, as soon as the divergence is confirmed, you have to wait for a retracement back to the upper body of the confirmation candle. As soon as that is confirmed, you place the next 15 minutes trade. Okay, so let's move on. So the next one we're going to talk about is the Euro USD. This is another wonderful pair with excellent pattern formation. Okay, so the Euro USD. So the same thing applies here. You want to wait for a cross out of the Bollinger Band. You can see price crossed outside the Bollinger Band, retrace back into the band, continue moving up, cross the previous resistance level, and then the confirmation candle was formed. But you don't trade at the confirmation candle. Wait for price to retrace back to the upper body of the confirmation candle before placing your trade. And so you can see and then you have to confirm that there is a divergence on the RSI. Okay, so this is Euro USD. This is another Euro USD. You can clearly see what happened. Price moved outside the Bollinger Band, retraced back into the band. Okay, retraced back into the band. You can see. Then went back up. You can form this, but we clearly advise. Okay, never trade something like this. You know why? It is too close to this middle line. Never trade a setup like this. Never, never, never. It is too close to the middle Bollinger line, the 14-day moving average. Never trade too close to the middle Bollinger band. Okay? Never trade close to the moving average, the 14-day, that's the middle line of the Bollinger band. Whenever you see an asset moving within the middle Bollinger band, never trade. Whenever you see an asset forming a squeeze, never trade. Whenever you see an asset with very high, extremely high volatility, never trade. Okay, let's move on. The next one is the Euro USD. Okay, so you can see clearly from the Euro USD that the price closed out of the band, and the price closed out of the band, and it formed a very strong bearish Marubozu. You can see that there's a clear bearish Marubozu formed over here, and then you can see price retrace back into the band, and then you can see price close down again, and then price close below the previous support level, and then you can see you can see the armor formed over here. I hope it's clear enough to be seen. Okay, so you can see an armor. The armor formed immediately after this Marubozu. And so the armor formed, and you can see the color of the armor is a green. And so that is an indication that price is going up. Okay, unfortunately the RSI has been cut out of our representation. Okay, so let's move on. So this is another example. You see price came out, went back in, came back out, and formed this. And there was an RSI there too, but the same thing, you can see the RSI was cut out too. Okay, so let's move on. Great British Pound USD. Great British Pounds USD. Okay, so you can see the price close out of the band, and there's a clear strong bearish momentum. Okay, so after the bearish momentum, you can see price also close outside, close below the level, the RSI 30 oversold level. And so as soon as price close below this level, that's a sign that the price is oversold. Okay, so you want to wait for price to cut back into the Bollinger Band. Okay, so as soon as price cuts back into the Bollinger Band, so you have to wait. You want to wait for a continuation, a trend continuation. Okay, so as soon as the price continues moving, then you wait for a cross of the previous support level. This is the support level according to the pair of jeans concept, if you can remember. This is the level where the buyers picked interest and started buying. Okay, so you want to wait for price to cut this level and cross down, and you must make sure that price does not cross the Bollinger Band again. Okay, so then you want to wait for a confirmation. So you can see it's a clear hammer, a clear green hammer. In a downtrend, it must be green. In an uptrend, it must be red. Okay, so then you want to wait for a cut back to the lower body of the confirmation candle. As soon as price cut back to the lower level, you place the 15-minute trade. Okay, let's move on. This is a Great British Pounds USD. This is another wonderful chart. It's very, 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 very reliable. Very reliable. Okay, so what you want to wait for, you want to see the price is closing. Okay, the price is closing out of the band, upper band. Okay, so you can see clearly The price close out of the band. Okay, so you want to wait for a retracement back into the band, into the Bollinger Band, and then you want to wait for price to move up again above the previous resistance level. And so, but then you now wait for a confirmation candle. You can see this is a nice AMA Marubozu. Okay, this is a nice AMA Marubozu. Okay, combination of AMA and a Marubozu. Okay, so then you want to wait, you want to ensure that the divergence is confirmed. Okay, you want to ensure that divergence is confirmed, and you can see that this is like on the same level. If you draw a line, you know it's like on the same level. Okay, so then you want to wait for a retracement, for price to cut back to the upper body of your previous of your confirmation candle. Okay, as soon as price touches, not closes, touches, you just want a touch. You want the price to just touch this upper body. As soon as it touches it slightly, you place your 15-minute trade. Okay, you just want a touch on this level, just one touch. Okay, let's move on. This is a Great British Pound USD. Okay, this is a Great British Pound USD. Price was also cut here too, so let's move on. Okay, so price was also cut here too, you know, but basically the concept is still the same thing. You want to wait for price to close down, close below the Bollinger Band, and you want to ensure that there is a cut back into the bands and there is a retracement back down with the formation of the confirmation candle. You can see this nice sweet little AMA over here. This sweet little AMA, very nice AMA. This is a classical AMA, but you don't trade immediately. You wait for a cut back. Ensure that you wait for a cut back to the previous to the level, to the lower body of the AMA. But I would advise you, for AMAs like these with a small body, make sure you wait for price to cut back to the middle of the middle of the wick. Okay, so since this the body of the AMA is small, it might not be reliable if you trade just the cut back on this body, or because the body is a small body. Okay, so it won't be reliable to trade the cut back on this. For me, the distance is too small, so you have to wait for cut back on the middle level of the wick, the middle wick. Okay, the middle level of the wick, as that will be a more accurate signal. Okay, so as soon as price cuts back and touches the middle point of this wick, you place a fresh 15-minute trade. Okay, so let me show you this again. Okay, so you can see price cross down, then cut back inside, continue retracing, cut back out again, continue and moved inside again, then cut back down again, cross the previous support level, but you can see price could not cross the Bollinger Band again. That's one signal. Okay, and then you can see this is the confirmation candle, but you can see that's the reason why I told you guys to always wait for a cutback. If you had not waited for a cutback to the middle level of this AMA, you will have lost this trade. But you can see the difference between a winning trade and a losing trade is patience. Okay, so you must ensure that there is a cutback. If you had waited for a cutback, you have won this trade. If you didn't wait for a cutback, you lost the trade. Okay, so you see the importance. This emphasizes the importance of a cutback. Always wait for a price to retrace and cut back to the upper body or the lower body of a candle, of the confirmation candle. Okay, so let's move on. So there's the Great British Pounds USD. The Great British Pounds USD. Great British Pounds USD. I mentioned earlier on that the Great British Pounds USD is a very nice currency pair. Okay, it's a very nice currency pair. Um, very very reliable. Okay, very reliable. Because it produces patterns, it produces reliable patterns, you know, and you can predict the Great British Pound USD. I don't advise you to trade New Zealand USD. I don't advise you to trade USD Swiss francs CHF, USD CHF. Okay, so USD JPY is quite manageable. USD JPY is manageable. Euro JPY is manageable. Okay, so USD CAD is very good. CAD JPY is very nice. AUD USD, one of my favorites. AUD USD is very 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 nice. Okay, so AUD USD is a kind of pair that can produce 10 signals, 10 entry signals in a week. Okay, so AUD USD is a very very good chart, and also AUD JPY is a reliable chart. Okay, so Euro USD is very good. It's quite good, not very good. Euro USD, then Euro Great British Pounds. That's another reliable currency pair. But the only downside to Euro Great British Pounds is that it ranges more than it trends. Okay, so if you are looking for something that will trend, you might not want to go to Euro Great British Pounds, because Euro Great British Pounds has it ranges more than it trends. Okay, so it doesn't trend for most of its cycles, so Euro Great British Pounds is more like a ranging pair. Okay, so these pairs are really really good, and they are very very good charts that produce excellent predictable patterns. Okay, so and I want to say this: always ensure that you check the news on forexfactory.com. Ensure that there is no news that can clash with your trade. And I reiterate, ensure that there is no news that can clash with your trade. Ensure that you give a 5-minute allowance before and after the news release. If a news release is 12-hour GMT, make sure you do not trade 11:55 and 12:05. Okay, always give 5 minutes allowance before and 5 minutes allowance after a news release, to give room or to account for the volatility. Okay, so always ensure that you do not trade. I repeat, do not trade during news release. The news release will make you lose. Okay, so avoid news release periods, and never trade. And if you are placing a trade that that the expiry will occur 5 minutes before the next news release, it's better you stay off such entries. Do not enter that trade or signal, because the expiration time will clash with the news release. So you have to trade away, as far away as possible from the news release. Okay, so never trade towards the news, because the news can turn a candle into a supernatural creation. Okay, what I mean by that is this: the news can turn a doji into a super marubozu. A super marubozu is a marubozu that it has very high volatility, that moves suddenly and is flying up or down without control. Okay, so that is a super marubozu. Okay, so now let's treat the last but not the least. Okay, so there's the Great British Pounds USD. Okay, so you can clearly see that there is a cut up. Okay, there's a cut up. There's a cross of the Bollinger Band, and then you can clearly see that price retraced back into the band, and then you can clearly see also that price continued the trend after breaking the previous resistance level. Okay, so the price continued the trend. You can see this marubozu over here was the breakthrough candle. That's the candle that broke through the resistance level. Always make sure that the price crosses the resistance level. Okay, so as soon as price crosses the resistance level, you have to wait for a confirmation candle. You can see the confirmation candle over here. This is a red marubozu, and I told you that when you're in an uptrend, your confirmation candle must be red. So you can see this is a red marubozu, indicating a shift in momentum from the bulls to the bears. Okay, so this is indicating a shift in momentum from the bullish sentiment to a bearish sentiment. Okay, so the next thing you want to wait for the price to retrace and touch the upper body of the confirmation candle, very close to it. Okay, so you can see price went back and retraced and came close to the upper body of the confirmation candle. That is the confirmation signal. Okay, so as soon as you see a retracement back to the body of the confirmation candle, the upper body, that is the confirmation signal. Okay, so you place the next 15-minute trade. Okay, so you place the next 15-minute trade. Okay, so basically that's all we want to do for today, and I would advise that you go through these patterns, go through these charts. Patterns repeat themselves. Okay, so make sure you go through the chart to sift for the hamster pattern intentionally. Okay, so you want to go through the charts in search of the hamster pattern. Okay, That way, you're sensitizing yourself to identify the pattern during during a real life session, or during a real life trading session. Okay, let me put it that way. Okay, so the more of the pattern you have in your subconscious, the more sensitive you are to take opportunities when they arise in a real life market. Okay, so you have to practice, and you have to learn. You have to go back and you have to study the pattern and know how the pattern forms. The hamster pattern forms in diverse ways, but it still retains its core DNA. It still retains its core principles. Okay, so that will be all for today, and I trust that you guys have been impacted, and I trust that you guys have learned something new today, and I trust that you are already deciding on your best time frame. We did 5 minutes the other day, and then today we are doing 15 minutes expiry. So the higher we go, the more risk averse it becomes. The lesser we go, the more risk tolerance it becomes. Okay, so for those who are risk averse, you might want to opt for the longer time frame, longer expiration time. Okay, for those who are risk tolerant, you want to opt for the lower, the smaller time frame, expiration times. Okay, so that will be all for today. Thank you once again for joining the Binary Option University, and we're excited to have you guys once again. See you guys at the next class. We're going to be talking about how to trade 30 minutes. No, I think we are going to repeat the 15 minutes again. Let's repeat the 15 minutes again. Okay, so see you guys at the next class. Bye for now.